Hi there guys, my name's Tim L and I'm trading with FeelgoodFX. Now we've decided to do a little video series or an educational video series on Elliot's Wave and Elliot's Wave forecasting. Because we've been asked by so many guys, man, how do you take out those positions? How do you buy right at the bottom? And how do you sell right up at the top? Basically it's just working the wave structure, and when you understand Elliot's wave principle properly, you're able to forecast properly and take advantage when everything is just rallying and everybody's thinking, wow, prices are going up, and that's when we decide, no, wait, this is the end of it, we're selling right now. And almost 80% of the time, that's exactly where the price turned around and people started to sell, or the banks or the big players started to sell. So, this is how we do it, and we're going to start off with lesson 1, and that's the basic wave structure. Okay, so I've seen a lot of wave structures on the internet, telling people, how impulse waves look and how corrective waves look, and none of them are really realistic enough for me to use in an educational series. So what I've done is I've designed one for you guys, and I've tried to put as much information as I possibly can into one image over here. Okay, so I'm sorry if it's a bit messy, but let's have fun and let's work with this. All right, so one thing we need to learn, we need to know about Elliot's wave is there's certain rules and guidelines that we need to adhere to for the principle to be effective for us. Okay, and I've got the rules over here. Impulse waves. Okay, now let's just go back to this image over here. Impulse waves are 5 wave structures. You can see this move up over here. That's our impulse wave. Okay, and we'll count those impulse waves 1, 2, 3, 4, 5. Okay, and impulse waves generally have an extension within the impulse wave. Now, these impulse waves 1, 3, and 5 are subdivided into impulse waves as well. So they are also counting 1, 2, 3, 4, 5. And generally, every single wave is going to have an extension. If you counted a beautiful 1, 2, 3, 4, 5, chances are that wave 5 is then one of 5. Do you see that? Okay, and a lot of people get caught out that way, guys, as they count 5 waves, but if you're not looking at the big picture, if you're not forecasting on large time frames, you can really get caught out. Now, one thing you need to know about the subdivisions and your extensions is a lot of people think that your third wave is the extension. Guys, the third wave is generally the one that extends, but it's not the only extension that you get. You get first wave extensions, you get third wave extensions, and you get fifth wave extensions. Now, in stocks or shares and Forex, the third wave likes to extend. But when you're looking at commodities and oil and gold, then it's your fifth wave that is your extension, because people buy those commodities in a panic when they need to hold on. If there's serious things happening on a global scale, and people are worried about currency, they're going to be buying gold, and then the gold prices are going to soar, and that's generally why you find that your fifth wave in gold is always extended. So guys, that is one thing that you really need to know, guys. You do get first wave extensions. You do get fifth wave extensions. Okay, now inside this image over here, I've given you guys some examples of first, third, and fifth extensions. Okay, so first wave extensions, you counted a beautiful 1, 2, 3, 4, 5, and that is just wave 1 of 5. Okay, so we are always looking for an extension. Whenever we're counting a wave, Before we want our price or start to think about turning our price or our position around, or taking profit, is we want to see, is there an extension in our wave structure that we've just counted? Now, if there isn't, chances are that fifth wave is just wave 1 of 5. So, guys, that is a nice, neat trick to have. Try it out, back test it on your charts, and you'll see it happens very, very, very often. Then your third wave extension, guys. There is a rule that says wave 3 cannot be the shortest wave of the 3 impulse waves. Guys, this rule is one of the strongest rules that you need to apply all the time. If your wave 3 is the shortest, then you are within an extension, or you are in some form of correction, which is generally like a B wave or a complex B wave that has got this it looks almost impulsive, but it's not. It's pulling and pushing, and it's generally a B wave or a complex correction that has that kind of structure, and that traps a lot of people, guys. So just be on the lookout for those. I'll see later on in our video series, I'm going to show you guys a couple of them, and you'll find they're very, very interesting. Very difficult to count because complex waves, they are counted W, X, Y, X, Z, and they can be quite intense. Okay, so this is actually, I've on this chart here, it's actually quite a good example that I've done here, where your third becomes the shortest, and that's generally when you are inside that extension. You can see here from our wave 2, we jumped back inside the channel there. Everybody was faked out over here at the bottom of wave 2. Everybody was saying, hey, great disappointment, we're selling again. And all of a sudden, there's this great cash boost, and it pushes us back inside our channel, and that gives us our wave 1. Okay, of lesser degree, wave 1, we've got a flat correction over there for wave 2. Then we're counting. Now remember, we haven't seen this part yet. So we've got our 1, 2, 3, 4, we're waiting for our fifth wave. Fifth wave is still going, it's still going, and then it comes up over here and we're saying, wait a minute, something's not right here. Wave 3 is now the shortest. Guys, that's when we need to start subdividing. Okay, so that's when we say, okay, wait a minute, wave 3 is the shortest, that means we need to start counting 1, 2, 1, 2. Okay, so then we know, okay, so then we've got another wave, 1, 2, 3, 4, 5. That extension is now taken care of for number 3. Then we need to complete our final wave over here. So we got this 1, 2, then we need that 3, 4, 5. Okay, guys, so very important and very handy rule to know, man. When your third wave is the shortest, you are within an extension. You are actually inside a major extension. Okay, then I've also got here our wave number, our fifth wave extension, and that's where we've got our 1, 2, 3, 4, 5. At the moment we're trying to see if there's any subdivisions over here. So what happens over here when it comes above this line over here? Generally, what I like to do is I take out a position. I take out that position, guys. I'm like, you know what? I've got 5 waves. I've just counted 1, 2, 3, 4, 5. Then what happens is, trading can be quite stressful sometimes, especially when there's money involved and you're amped, you've got a good position. But what starts to happen here is it bounces. And then we start to see it extending over there. Guys, this is an ending diagonal. Okay, fifth waves, they can be ending diagonals. So this would actually be a 3-wave structure over here, 3, 3, 3, 3, 3. But when it gets there, and it starts to pull back, I've counted 5 waves. So I'm not really, I'm going to trust my strategy. And then that just means that this top over here was just 1 of 5, guys. Just like this one here at the bottom. Same thing here at the top, guys. So then I'm just going to count. I'm not going to take out more positions, guys, because that's really going to get us into trouble if we start stacking positions. But what I do is I count that. Okay, so let's say this is not 5. Let's say this is 1 of 5. Then I'm just going to count another 5. So I'm going to say, okay, 1 of 5. 1, 2, 3, 4, 5. I'm going to wait for some channel spill over there, and that's when I take out my next position. And that's how we do it. And then we know, okay, well done. We've got our 5 waves. It's time for people to start taking some profits. And this one wave over here could be an A wave. It could be a wave 1. Depending on where we've come from. But we've counted 5 waves, and it's time to start taking profit. Now, if this is a monthly chart, guys, that means that the price is going to be falling, for the next 2-3 years. So that's a good time to start selling, and that's why we do it. Okay, so guys, that is for impulse waves. Let's see what else over there. Another guideline, guys, that is extremely important. Wave 4 does not overlap into the price territory of wave 1. Now, guys, there is an exception to this rule, but use this rule, use this guideline, okay? Because I'm going to call it a guideline because it's not a rule, because there is an exception. The exception is leading diagonals. Leading diagonals, that's generally in a wave 1. When your wave 1 is building up, wave 1 can still be a 5, 3, 5, 3, 5 subdivision. But that price, the wave 4, can move into the territory of price of wave 1. Okay, guys. So I'm going to say that that's a guideline. People say that it is a rule, and people live by that rule. But when you've been trading Elliot's wave for as long as I have, and I've only been trading it for about 5 years now, but you start to notice, okay, listen here. If I've just bought right at the bottom, I'm always expecting a leading diagonal. And I actually caught one the other day on GBP USD at the bottom of wave 4. My next wave started to pull up, and it was a beautiful leading diagonal. It looks like a squashed wave, and then all of a sudden it starts to open. So, guys, that is an exception to that rule. And then wave 5 needs to end with momentum divergence. Guys, momentum divergence is when you've got a leading indicator, and I'll show you. I don't have one on this chart that I designed here, but you want to see some divergence. You want to see that the trend is ending, even though price is going up. The strength of the trend is coming down, and what a lot of guys do is they use an RSI or a MACD or you know what, any oscillator that they've got attached to their charts is going to indicate the strength of the trend. Okay, guys, so that's the guidelines for the impulse waves. If you guys have got any questions on that, just send me messages. At the bottom in the information, I'm putting a little WhatsApp learn how to trade. Feel good, learn to trade group that you guys can join to. It's free to join to the group, and that's where I share some ideas, and I share some little tricks and fractals, and I just have a lot of fun, and I like posting it up there. So you guys are welcome to join on that, or you can just in the comment section of the video over here, you guys are welcome to write some comments, and I'll try and get to all of them. Okay, so that's it for our impulse waves. Now let's take a look at our corrective waves. Corrective waves, like I mentioned in the beginning of the video, we label them A, B, C, or A, B, C, D, E, or W, X, Y, X, Z. So we're going to assign them a letter instead of a number. Okay, now here I've tried it, like I told you in the beginning of the video, man. There's so much information on Elliot's wave. There's so many different types of patterns that we need to learn. So I've tried to put as many as I can inside here. So what I've done here with our wave 2 is I've given you guys what is a complex or what you call a double two. Sorry, a double three, man, double three, a double three. And what a double three looks like, and if you guys want to try and understand how a double three looks like, it is two corrections inside a larger correction. So you can see over here, I've got a little, if I subdivide this, it's an ABC X. That X over there, that is just a failure to break out of the correction. So we got this little sharp little X, and then it gives us another correction again. And then it gives us an A, B, C. Now, generally, these things alternate. So if my W was a zigzag, then my Y could be some sort of flat correction. Or if my W was a flat correction, my Y could be a zigzag. Or my Y could be a triangle, or the market is going to throw something at us that it's going to put us off, or it's going to induce selling. It's going to say, listen here, now's the time to sell. The banks are all hungry right now. The banks want to buy at the moment, and what's going to happen is they're going to give you this emotion that says you need to sell. And if you guys don't know your wave counts, or if you guys are off on your wave counts or trading on emotion, man, trading on emotion is where people lose money, because the market is feeding you emotions. The market is saying, I want you to sell. Why? Because I want to buy. I'm buying it. So I want you to sell yours so that I can buy it from you. Alright, so it's going to induce this emotion that says sell. It's going to give you some disappointment, especially on this wave 2. As long as my wave 2 does not retrace more than the origin of wave 1, it is still valid. We are still in an impulse. So guys, that is, especially when it breaks out the channel like that, and I've done that on purpose, because that is where guys really get taken out. And I've seen a lot of people, they say, oh, this broker sucks or whatever, it's trading against me. Guys, this is a $1 trillion market. They are not going to turn the market around for your $100 or your $1,000. There are trillions going at the moment. And these banks are inducing that emotion that says sell. So at that point over there, everybody goes, no, my pattern is invalid, and I need to close my position. Guys, I say this with passion because I've been caught out so many times, guys. That second wave is always a wave of disappointment. So you got to hold in for that. And that's why I like to buy over here. When I've counted 5 waves down, or there was an ending diagonal in a C wave, or something like that, man, that's when I buy, and I buy right at the bottom. Because then, I don't like to see negative. I don't like to see a negative balance. I don't like to see losses, which is a natural emotion. So that's why I've developed a trading strategy that allows me to buy right at the bottom, and I use geometry to do that, including counting waves. All right, so I know I'm going a little bit off topic over here, but I'm just passionate about it, man. So let's get back to it. Okay, so that's a complex correction. Now, you do get a 333 as well. A 333 would just be labeled WXYXZ, and then that Z could be another zigzag coming down, or probably one of my most favorites is it gives us a triangle. So it gives us a ABC for a W, then an X, which is a little zigzag. Then it gives us another ABC, that's our double 2 for our Y. It gives us another little zigzag for another X. And then it gives us an A, B, C, D, E. Yes, and this correction is just taking forever. By that time, a lot of the buyers are like, oh, nothing's happening on this pair, I'm just going to close it. Or they just move their stop loss up and they get taken out. And guys, stop losses are very important, but a cluster of stop losses, I mean, they're sell orders. So when you've got 50,000 people putting a stop loss at a certain place. If I'm a bank, I'm going to go for those stop losses because those are orders to sell. If I'm buying, I'm going to chase those stop losses because those are sell orders. And I want to buy those orders. You see, so guys, be very careful when it comes to stop losses, especially when you want to do a free trade. You know, when you're in profit and then you move your stop loss up so that you're in the trade. You call it a free trade. Guys, free trades don't really work. They don't. Just stop doing them. Just count your waves, monitor your chart, and everything will be fine. Take profit when you're happy with your profit. Okay, but anyway, guys, then the next correction I've got here is I've got a flat correction, and the flat correction that I used here is probably my favorite, and it's my favorite because my favorite instrument is the British pound versus the dollar, GBP USD. It's my favorite instrument to play on, and guys, it is full of expanding flats. They call these expanding flats traps. And when you know how to work them, they can work well in your favor. And these are subdivided into 335. Okay, and I think I've got it over here. Yeah, corrective wave guidelines. Flat correction 335 is the subdivision. So let's take a look at this, man. It's ABC. 1, 2, 3, 4, 5. Guys, C waves are very impulsive, hey? A C wave is basically your third wave. And you know, when you're in an impulse, your third wave is generally the most strongest, guys. So your third wave is very, very impulsive, and you'll normally find that a C wave has got a 3-wave structure. a 5-wave structure. So whenever you counted a 5-wave structure, just look, where did this 5-wave structure come from? Did it come from an A, B, and now you're actually in a C? Because what a lot of guys are going to start doing, especially the newcomers into trading, they're going to count this 5-wave structure. They're going to say, okay, fine, the market's turned around. We should have been selling over here, and that's where the trap is. That's the trap, guys. Let me show you here. We've got our high over here. It broke the high. So what's happening over here is people started buying. They said, okay, the high has been broken. It's time to take out a buy position. Then what starts to happen? Oh, no. So what happens is I'm going to put my stop loss over here. Okay, well, I can't, as long as it doesn't go to the bottom over here. And then I'm fine. And what happens? Takes out my stop loss. So everybody says, okay, well, fine, it broke the low. Now I need to be selling. And what happens? Oh my goodness. This market, I'm telling you, this market is trading against me. No, guys, it's not trading against you. You just don't know your patterns. Learn your patterns so that you can anticipate the next move. We're playing chess over here against the banks. That's what we're doing. And you're either trading with the bank or you're trading against the bank. If you're trading against the bank, I don't think you have a big enough balance inside your account to be able to trade with the bank. So you need to be able to trade and put your emotions aside and study the pattern, come up with a forecast and trade your forecast. Yeah, so you know, okay, well, yeah, man, I've just finished my wave 3. I expect some sort of correction. My wave 2 was a complex correction, so I'm expecting something more simple now. And I'm waiting for something, and I'm waiting for the market to feed me an emotion that says I need to start selling. This impulse wave is going to do that. 1, 2, 3, 4, 5. Whoa, that's impulsive. I need to start selling. Wait a minute. Where am I within my wave count? I'm actually at my wave 4. It means that I need to actually start buying. So I'm actually looking for a buy position over here. And there you have it. All of a sudden, oh wow, jump back within the channel and we're good to go. I need to count my 5 waves up so that I can take my profit. Okay, so guys, very important. Know your patterns, man. Know them very well. And that's the flat correction with the expanding flat or the trap that I put in there. I obviously put in the trap because it's my flat. Okay, guys, then we've got a zigzag over here. Now, I do have a zigzag here, and it's a very, very large zigzag, as you can see over here. This is a zigzag. And the subdivisions are 5, 3, 5. So those are the waves that we're going to count within this zigzag structure. Now take a look over here, man. Now we've got 1, 2. What do you see here with my A wave? Okay, my third wave is the extension. So I've got a 1, 2. There we go. This wave here was the shortest. You see there, as it starts pulling away, it's okay, 1, 2. Whoop. 1, 2, 3, 4, 5. A little bit of an ending diagonal for my my fifth wave and the extension. Okay, then I count my 4, 5, and then I've got a triangle over here for a B wave, but it could be a complex correction, it could be a reversed expanding flat, could be a flat. It might just be a little zigzag, but what I like to use the wedge over here, because wedges are perfect B waves. Triangles always precede the final move. So you'll find a triangle in your fourth wave, or you'll find your triangle in a B wave. Guys, it's a very cool trick to know, man. And just look for them. Go through your charts, look for triangles, and just see where are they placed all the time. You will find it as preceding the final move. So that's why I've got this B wave over here. B waves are subdivided into 3, 3, 3, 3, 3. Okay, so it's five points labeled A, B, C, D, E, and they are all 3 wave structures. This one over here is just a little ABC, 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 and so on. Okay, and then we've got our C wave. C wave, guys, can also be ending diagonals as well, guys. That's something that you need to know. I didn't do that in here. I've done a first wave extension over here for my C wave, and that's because I'm looking at the US index at the moment, and I've pretty much designed this structure as the same structure that I see in the US index at the moment. Okay, so. All right, that's it for my zigzag. I think I've covered everything over here, man. I've covered zigzags, I've covered flats, I've covered the triangles, double threes, which is a combination, and then triple threes, combination of 3 corrective patterns, all broken up by an X, or a failure to break out of the correction and start that impulsive move again. All right, so guys, man, I wish you guys all the best of luck, and I really hope that this has been informative for you guys. And if you guys have got any questions, man, just join the WhatsApp group by clicking on the link that I provided at the bottom, or just write a comment at the bottom, and I'll try and get to all of them. But yeah, man, I just want to wish you the best of luck. And this is our lesson 1, man. This is just the basic wave structure. And what we're going to do in our next lesson is we're going to now take this information, we're going to look at the big picture, and we're going to try and forecast using this principle by knowing our patterns, knowing how zigzags look, knowing how double threes look, what to expect when we are in a double three, what to expect when we are in a zigzag, when you're in a fourth wave or what, man, just so that when you can see, okay, well, listen here, over the last month, I see a 5 wave structure here, then I see a 3 wave structure here. My next move, I'm definitely going to be expecting another 5 waves. So I might be in a zigzag at the moment, and this zigzag could have been happening since 2002. So guys, it's a very, very cool tool to forecast. And when we are using Elliot's wave and we're forecasting, we'll generally go from our monthly chart or our weekly chart or our daily chart to look at the big picture, so that we can zoom in and see exactly where we are right now. What I see on my US index is we are sitting right there. So I see we are actually in a first wave extension. I've counted 1, 2, 3, 4, 5. None of those waves have extended, which means that we are at 1 of 5. So I can expect, okay, that we are going to be doing a little 2, 3, 4, 5 before the move starts to happen again. And just from my opinion, from what I can see that the US is doing at the moment with Trump and all these regulations and business, and they are really in a corrective state. They are busy correcting the economy at the moment. But anyway, guys, I think I'm rambling. I hope that this has been informative for you guys, and please look for the next video.